Well, good afternoon, ladies and gentlemen. Of course, to say good afternoon to those of you who are joining me here on the East Coast. We'll also say good morning to those of you who are joining us from the Central Time Zones, the Mountain Time Zones, or the Pacific Time Zones. And, of course, good evening to anyone who's joining us from across the pond in parts of UK or parts of Australia. And good early morning if any of you are joining us from parts of I should say Australia or Asia. Well, welcome to today's presentation, the Introduction to Power Options webinar, Wednesday, of course, right before expiration. So as we get closer to the standard expiration for March, we always want to spend this session going over the portfolio tools to show you how these portfolio tools on Power Options can help you paper trade, track, and manage your positions. Now, we also want to start off this presentation with what exactly is Power Options. Well, Power Options is a patented suite of search and analysis tools designed for self-directed options investors. Ernie Zeriner created the Power Options tools about 15 years ago after he retired from Hewlett-Packard. Of course, he'd been trading options for about 20 years before that. Now, when he designed these tools, he designed the tools because he wanted a set of tools that would allow him to search across the universe of options to identify new positions that matched his personal risk-reward tolerance, both the stock and the options. So if I was looking at a covered call, he'd want a tool where he could put in the stock fundamentals and technicals he wanted to see, as well as the option information all on one page. And once you've identified the positions in a given strategy, you can quickly compare the risk versus reward, run what-if scenarios, compare other strike prices. And then, of course, the portfolio tools, which we're going to focus on today, which help you paper trade, actual trade, track, and manage your positions. Of course, in addition to that, we offer countless educational articles, help pages, and archived webinars to help you get more familiar not only with the various option strategies, but also the tools on the site. As I mentioned, we've been in business for over 15 years, but we have many more years of combined trading experience. Everyone here at Power Options uses these tools to trade their own personal account, myself included. In fact, the only time I log on to my brokerage account is when I'm ready to place a trade. And by the time I log on to my brokerage account, I've already made a decision of which option I'm going to roll to or which new position I'm opening through the Power Options tools. Now, for those of you who don't know me, my name is Mike Chuck. I'm the Director of Education here at Power Options. I've had the great pleasure of working with Ernie Zeriner and the Power Options staff for the past 10 years. I handle a lot of the coaching sessions, webinars, and education on the site. I have co-authored 2 books on options investing with Ernie, and I am versed in all strategies on the site, but I always want to be upfront. There are certain strategies I've never traded in my personal account, things such as naked calls, iron butterflies, short straddles, and short strangles. These positions just don't match my personal risk threshold. However, if you do have questions about those later on, we'll be more than happy to answer those for you. Now, what we're going to go over today is the functionality of the portfolio tools and how you can use them to help you make your trading a little bit easier. We're going to take a look at how to create a new portfolio for those of you who are just getting started on your 14-day free trial, what steps you would use to just create a new portfolio. We're going to discuss entering a position either from the tools or manually. And then we're going to talk about, as we're tracking the positions, how to use our position analysis tool to evaluate liquidation versus the different adjustments. And then we're going to use that simulate trade feature, of course, so we can evaluate what the rollout opportunities would be compared to one another. And, of course, there's also a way that we can do adjustments manually. If we go to the position analysis tool and we don't see a potential rollout opportunity, well, maybe we'll go ahead and do that manually using the profit and loss chart as well. So there's going to be a lot of features we're going to cover today, and let's just go ahead and jump in and get started. So we'll navigate over to the Power Options suite of tools, and what we're looking at here, of course, is just a 14-day free trial account. For those of you that are just getting started on your 14-day free trial, we do want to recommend that you take advantage of the 4 steps that are here. You can request a printed user guide be sent to you, or you can access the PDF at any time from the Learning Center. We have a variety of flash tutorials to help you get better acquainted with some of the search tools, the option chain, and the portfolio. You can access those in the Learning Center as well. We do host a variety of free live webinars during the week, so you want to join us for those. And of course, whether you're a subscriber or a trial member, and anytime you can sign up for one of those free individual coaching sessions. It's not a sales call. It's essentially just a 40 to 45-minute phone conversation with myself or Ernie. We'll walk you through the tools on the site, answer any questions that you have as well. So you can take advantage of that at any time. Now, before we get started with the portfolio, I just have one poll I want to ask today. And excuse me, let me go ahead and set that up. What I want to know is just what kind of option strategies are you mainly looking at right now, or whether you're researching or trading. Are you mainly looking at covered calls and naked puts? Are you looking at protective option strategies, the married puts, the radioactive trades, or the standard collars? Are you looking at vertical spreads, bear call credits, bull puts, credit spreads, debit spreads perhaps, and iron condors? Are you looking at long calls and long puts? Or are you looking at the time spreads? And of course those would be it says diagonal and vertical. I really mean diagonal and horizontal. I keep updating that and it keeps reverting back. So I'm probably going to have to rewrite that whole poll there. But yeah, just the time spreads, the diagonal or the horizontal spreads. And we have a good mix of all the strategies here, and that's good. I just want to make sure that we share some examples of each one in the portfolio as we go through the presentation. And we already have most of these set up in there, so we'll be able to take a look at some examples. But we may have to enter some new positions into our portfolio for today's example, and that'll be perfectly fine. All right, well, I've had the poll open for about a minute. I'm going to close it down another 10 seconds. If you haven't voted yet, I encourage you to do so. Most of you have, and I appreciate that. So let's close this down in 5, 4, 3, 2, 1. And then close the poll and share the results. So it looks like the winner today is vertical spreads at 69%. 63% of you are looking at covered calls and naked puts. 38% of you are doing the time spreads, the diagonal spreads and horizontals, and a tie at 25% with long calls and with the protective option strategies. Well, great. We'll take a look at each of those a little bit with some of the analysis views and some of the rollout opportunities. So let's go ahead and hide that there. And let's go back to our portfolio. Now, PowerOptions site is arranged by a tab navigation system. So the Home tab is always locked in place, as is the My Portfolio tab. The other strategy tabs here, you can customize from the other strategies menu. So if you're, to look for new positions in covered calls, naked puts, and so forth, if you don't see a strategy that you want, just go into that other strategies tab there and you can pick and choose. We're going to spend our time today in the portfolio. So I'm going to go into the My Portfolio tools to start. Now if I'm looking to create a brand new portfolio, there's one of two ways that we can do it. The first way is that if I'm just creating a paper trade account, let's say I want to simulate having an account and I want to track to see how a month or so of iron condor trades or 2 months of iron condor paper trading would work. Well, what I would do is I'd go into other strategies first because I don't have iron condor there. So let me remove the bull call debit and I'll just add iron condor from the menu. Let me go ahead and click save there. Now we're going to spend too much time on this, but let's go ahead and go into the iron condor menu and then I'll go ahead and click on search. So this will allow us to identify new positions. Now if I'm just getting started, jump in, set up the iron condor tab, go into the search, and we have several of the listed trades here which match the default criteria. This is actually a search we did in a previous webinar. Let me go back to the initial values, which is the main default you'd see if it's your first time logging on. Okay, so we have a lot of SPX trades here on the indexes with different expirations for the weekly and standard expiration as well. Now, after I scroll down below and I adjust my criteria based on what I want to see for maybe net credit or range out of the money, probability between perhaps, or probability above the short put break even or upper break even, after I've made my tweaks and I have my results. Now if I just want to start adding positions into the portfolio to start paper trading them, no problem. And click the more information button. Let's say I wanted to take this SPX index trade here, the iron condor position. Well, I'll go to the more information menu. This is where you do your further research and analysis. We're going to go ahead and go add to portfolio. We're going to select add to portfolio from that drop down menu. Now if this is the first time accessing the portfolio, we'd only see this choice here at the top. It would start us off with a paper trading account of $100,000 here. And so what I'll do is we'll just type in, we'll select that of course, and we'll just type in webinar iron condor for the time being. Okay, so that would be the only choice you'd have. Now once you enter in the name for your portfolio, whether you want to call it paper trade or anything along those lines, we'll just go ahead and click insert. Now the system knows that we're looking at an iron condor position because we linked from the search tool. So it would have all of the legs that we were looking at on this position. This is actually a pretty tight spread. I probably wouldn't trade this one, but this is just an example. And what I mean by a tight spread is that we're selling the 1550 put and selling the 1560 calls. There's not a lot of room there for movement to the expiration date. But in any case, we'll just put in simple here our number of contracts. I'll just put in 1, but if you're trading 10 contracts, of course, you can just adjust that as well. We have our selected trade date. Since this is a paper trade, we'll just put in our commission fees of 0. And we'll just use the natural prices that we use. Now, if this was an actual trade, I'd probably record my commission fees in. I probably would have used the midpoint prices to try to get a better trade. But for this example, we'll just leave as is. So the system grabbed the natural bid price for the 1550 put, the natural ask price for the 1540 put to complete the bull put spread side, and 1170 for the 1560 call that we're selling, the natural bid, and 760 the natural ask for the 1570 call that we'd be buying as well. So let's go ahead and submit that. Once we submit that, this will take us into the profit and loss portfolio under the My Portfolio tab. Now the profit and loss portfolio is where we track our open positions. And this one is pretty simple. We're just creating a paper trade account. We just linked it simply over to, excuse me folks, the portfolio from the search tool to create a paper trade account. Now we generated an initial credit up front. So we got $720 here for this spread, or $7.20, times the 100 shares per one contract. So that was our initial net credit on the Iron Condor. And we see here that the system already set in some alerts for us for the upper stop limit and the lower stop limit. Now some of these strategies will do that for you just as a basic rule. And as I mentioned, this probably wouldn't be an Iron Condor we would choose with the index currently at 1551. We didn't go too far out of the money here. We just grabbed the first one on the results. However, we see that alert has already been triggered. And if we wanted to view the alerts, let's talk about that now since we have the position in. Simply click the alerts column and the link view. And what the system did here is it automatically set about a range where a stock price, if it's within, I think it's within 2 or 3% of our short put strike price or our short call strike price, that was automatically set. We can remove those. Okay, for some of these Iron Condors and the bull puts, that might be already set, but you can remove those. We can just uncheck that and remove our upper and our lower stop limit here. I'll remove the one on the call side as well. But we'll leave the default in for an 80% decrease. So at any time, as we're tracking this position in the portfolio, if our short put declines by 80%, meaning we can buy it back to close and still make 80% of the profit or the premium we collected, we might want to do that, and the same with the call. Now, some of the other things, alerts you'll be able to set, and we'll take a look at this in some of the other strategies as well. You can also set alerts just for the basic stock. Many times in a search, for example, if we're doing a covered call, a naked put, maybe a standard call, or maybe even a married put, in the search tool, I would have looked for a stock that's bullish, that's maybe in an uptrend, trading above its 50-day moving average. So in that case, I may want to look for an alert if the stock reverses and starts to trade below the 50-day moving average as well, as it shifted patterns or shifted trends. And of course, if we're doing covered calls, anything that's a long stock position, we may want to, well actually any spread position or any even a long call, you may want to be notified if you're within 3 to 5 days to earnings. Or maybe if you're doing a covered call, you may want to be notified if you're within 3 to 5 days ex-dividend. Naturally, this wouldn't apply to the SPX Iron Condor we just put in. We won't have an earnings date or an ex-dividend date, but you can do that on the stock positions. So once you've set the alerts that you want for either each leg of the spread or for the underlying security as well, then just click Save, and that'll take us back to the profit and loss portfolio, and our alerts are set. Now, since I removed our lower and our upper stop limit that were automatically in place, excuse me, we see that now our alerts are now clear. We don't have any notification available. Now that's how you can simply just start a paper trade account or a paper trade portfolio here. For many of the searches, once you identify positions, or if you identified a position using the search by symbol tool in a given strategy, you just want to see the Iron Condors on Apple or Google or a bull put spread, or you just wanted to look up long calls on a given stock, once you've identified the position, you'll always be able to link to Add to Portfolio from that More Information menu, and then you can choose to put it in an existing portfolio or just start a new portfolio from scratch with a cost basis, as I mentioned, an initial starting basis of $100,000. We see my new cash on hand is now $100,720. This is taking into account the net credit that we received for the position. Okay, so What if, and this is what I deal with, discuss with a lot of customers who are first starting out on a trial, you have an account already, most likely. You're already trading. You're using a Trade Monster account, Thinkorswim, Options Express, maybe just Fidelity, something along those lines. And you want to recreate your portfolio. Okay, well, no problem. Where we'd start there is under the My Portfolio tab. We would simply go into the Setup feature. And this will let us create a portfolio on the fly. So we see here we have all of our created portfolios. But again, if this is the first time you've gone into the portfolio menu and you've clicked Setup here, you'd only see this choice: New Portfolio, No Cash on Hand, No Starting Basis, and No Starting Basis Date. Now, let's say that we do have an account, of course, and we have maybe 5 or 6 positions in it right now, whatever they are, covered calls, or maybe you have 10 or 15 long calls. You look at your portfolio, and you've got maybe a buying power of $15,000 in your account, and you've got maybe $35,000, let's say, invested in other positions, covered calls, long calls, some spreads, and so forth. So your total liquidation value, if you closed out all of your positions right now and then added it to your cost basis, would come out to $50,000. Yes, you have $15,000 cash on hand right now, but you also have $35,000 worth of other securities. So in that situation, what I do and what I discuss with customers to create a new portfolio that's tracking what I'm looking at in my actual brokerage account, well, first we start with a name, and we'll just call this Trade Monster Account X7135. I don't know what kind of numerology, numbers that they use there for their account size. But what I would do now for my cash on hand on my starting basis, I would create this as my total liquidation value for the portfolio. So my cash on hand, I would put in $50,000. And then I would just click the copy button over, and that would be the starting basis. So right now this reflects the total liquidation value of my portfolio, what I have invested in my securities, options, and stock trades, and what I have invested in just cash on hand. Now the starting date, we can adjust this. Let's say we actually started this portfolio a year ago, so I'll put in 3/13/2012, and we'll just click Submit Changes. Now this is going to keep us on our same page, but we do see that we have our new portfolio recorded. Okay, oh, this should have been Trade Monster, but I put in Trad Monster, so that's okay. So now what we want to do, we want to start adding our existing positions into this portfolio. So we'll go into Profit and Loss Portfolios now. Remember, this is where we track our open trades, and it linked us directly to that newest portfolio that we just created. So I have no positions in this Trade Monster account, this theoretical account, where we have a cash on hand and starting basis of $50,000. Now, we want to start adding positions. So let's say that coming up to March expiration, back in February, I bought shares of, let's say, Johnson & Johnson at 75-ish, and I sold the 75 March call for around 90 cents. Okay, so what we'll do now is in this Enter New Position field, we want to put in our information. So we'll click that drop-down menu, and this will give us all of our strategies. Now, if you have a covered call position that you're adding into the portfolio, you don't want to do a long stock and then a short call. You want to have it as a linked position. In PowerOptions, we track your positions as a linked position. So I may open a portfolio and have 2 covered calls, 3 collar spreads, 2 bull puts, and 2 calendar spreads, for example. So they're linked positions, so I can track them and view the liquidation value versus the future expiration value, rather than tracking them individually as a long stock and a short call that are not linked together. All right, so I'm going to go ahead and click on Cover Call, and the system's going to pull up the appropriate entry fields for us. So we have a stock field where we need to put in our stock symbol, our number of shares, transaction date, price per share, and commission fee. Okay, so we'll put in Johnson & Johnson, J&J. Let's say we had 300 shares of stock, and we actually opened this position about a month ago, on February 14th. Let's just use Valentine's Day. And now at the time, we put in a price of $75. Let's just keep things simple. And our commission fee, let's just say it was $5.95 for 300 shares. Okay. Now, Jose, I'll get to you in just one second. Now, for the option selection I sold a call. I sold a March 75 call against the position. Now it's going to be a different price today, but that's all right. So what I need to do now is I'll click on Select Option, and this pulls up the change selection. Now yes, I'm 3 days to expiration, but that's okay. So I know I sold in March. We sold the 75 call. And at the time, when the stock was right around 75, we actually got 90 cents. So I've got to mark the 3 contracts down. I'll keep the same trade date at 2/14. And I'll put in my commission fee at $5.95. Again, let's say we got the same commission for our option. And we said that the premium that we got at the time was actually 90 cents. So let's put that in. Okay, so there's our covered call position. I've got my stock leg entered manually and our option leg. We'll click Submit to enter our trade, and again we'll be linked to the profit and loss portfolios, which tracks our open positions. Okay, so before we get into reviewing this, I'm sorry, Jose posed a question, and he said he's a little bit late. Hope you're going to give us a copy of this webinar. At any time, you'll be able to access our archive presentations. I am recording this one. We may use it and replace the existing portfolio that walks through the PowerOptions tools. But at any time, on your trial account or subscription, from the main home menu, we can go into Learning Center. And then from the Learning Center menu, right in the middle there, we'll click on Webinars. And this will take you to the Archived Webinars page. So we have some previously recorded webinars by category over here on the right. We have the PowerOptions Tools Archive, PowerOptions Strategies, and so forth. Let's click on PowerOptions Tools Archive. And you see there's some basic introduction to PowerOptions, and here's one from 10/17/2012, the PowerOptions Portfolio Tools. This is also a public page. You don't need to be logged into your trial or your subscription account. Let me send everyone the link here to the public page. So if you wanted to review any of these at any time, you can just go to powerop.com/webinars.asp. And yeah, I think this is a little bit more than 3 or 4 months old, Jose, so we'll probably replace this existing one with today's presentation. It'll probably be available around 4:30, 5 o'clock this afternoon, or first thing tomorrow morning. All right, so let's go back to our portfolio. We're in the profit and loss portfolios where we track our open positions, and we have Johnson & Johnson. Now, as I mentioned, we see that we have our covered call position. We entered it properly as a covered call strategy, so we're seeing it as a linked position. We have our stock information. So J&J, 300 shares opened on February 14th. The age, this reflects how many days we've been in the position for the stock, but anytime you're tracking an option, it shows you how many days, the numbers in parentheses here, are how many days we have to expiration. Now, our total cost, this is important here. Our total cost for our 300 shares of Johnson & Johnson 75 was $22,506. That includes the commission. We kind of rounded it up to $6. So it would have been $22,500 to buy 300 shares of stock at 75, and then our $6 commission. So that was our total cost. Now notice we kept our starting basis of $50,000, but because of the outlay of cash we needed to purchase our 300 shares of J&J, we've lowered our cash on hand down to $27,758. I wanted to point this out because this is why when I created that new portfolio to replicate what I have in my trading account, I used the liquidation value for the starting base and the cash on hand. If I put in a starting basis of $50,000, but I left my cash on hand at $15,000 and then entered this trade, I'd be looking at a cash on hand basis of negative $7,000. Right, because the portfolio assumed I only had $15,000 to trade, yet I have this trade open that cost $22,000 to open. So that's why when you're creating a new portfolio from the start to recreate what you have in your actual trading account, use the liquidation value of your current portfolio, then start adding your positions, because each new position you add, it'll start reducing the cash on hand basis properly, so you'll be able to get close to what you're reflecting in your actual portfolio at your brokerage account. Okay, so we have our stock, and now we see our change. Well, the stock has moved up $3.44 from where we purchased it. It's currently trading at $78.44, and our short call has moved up $2.60 as well. And of course, we're showing the effective cost per share. I'm going to explain that a little bit more in just a moment. Now, one of the other features I recommend doing once you've start entering your positions in the portfolio. Up here on the right in the profit and loss portfolios, we have a checkbox where you can email your portfolio daily. So it'll just give you sort of a backup so that you can see your portfolio. It sends the email out at about 5 o'clock in the afternoon Eastern Time. But the other box I've checked here is View Position Analysis. Now, if you don't have that box checked, what we'd see in the portfolio, of course, at first, the profit and loss portfolio would end right here. So we could see that we have a monetary gain on the stock of $1,025 or 4.6%. We technically have a loss on the option because we sold it for $90, but it would cost us $350 to buy it back. So we have a loss of $786. And it's showing a 297, almost a 300% loss because it's a loss that's 3 times what we collected for the initial call. But by checking this box for View Position Analysis, what that does for us is as I scroll over to the side, it would add these 6 new columns. So now I'm seeing the position as a whole. So my position cost for this covered call was an outlay of $22,500, but we collected $264 against it. So we have an outlay of capital of $22,242. Now this was an example trade. I'm not saying it's a great covered call. We just wanted to plug in something quickly. But our original expected gain or loss for this 30-day trade was about 1.2%. Okay, not too great, and it kind of worked out well. So these new columns are added, so we can see the position as a whole. What was I expecting if I got assigned? It was 1.2%. If I liquidated the position right now, if we bought to close our call, sold to close the stock, we'd have a pretty much close to that. We'd have a gain of 1%. And then our expiration gain or loss here is reflecting 1.1%. Now, why is there a subtle difference between the original expected value of $258 versus making $252 here at expiration? What the system, is saying is that if the stock's trading at the same price at expiration, we'd make 1.1%. But why am I not making my 1.2% that we were looking at? It's a difference here of $6. Well, the system is calculating a commission fee. It knows that if the stock stays at 78.44 on this covered call, we'd get assigned, but we put in a commission fee, remember, of $5.95. It rounded it up to $6. So we'd probably have to pay an assignment commission that was close to $6. So that's why the expiration value is showing $252 instead of our original expected gain loss, which is just the combination of the return if assigned, not including the commission fee. Okay, but I highly recommend that you use this because especially for spread trades, when you're doing the iron condor position, let's go back to that portfolio very quickly. Webinar Iron Condor, that's the first one we created directly from the search. Well, we do show you a summary here, sort of where you stand right now. The net cost, that's the net credit we received for the 4-leg transaction. The current price, if we went to close it right now, it's showing us a summary. But when you get into bull puts and bear calls and so forth, it's just better to have this view, I think, over here. To me, it's much cleaner. So I know I originally received, my position cost was negative $720 for the Iron Condor. That's the monetary net credit we received. That was my original expected gain. But right now, it cost me $850 to close the position. So that would be a loss of $130 total. But if the stock stays at the same price, in this case, the index stays at the same price between now and expiration, our expiration gain would be 100% of what we expected to make. That's $720 net credit. Okay, so that's what that View Position Analysis checkbox allows you to do, especially if you have multiple trades, multiple covered calls, multiple combination trades. It's very handy to have that view there so you can compare immediately what is this current liquidation value versus my future expiration gain or loss. All right, now as before, what we saw when we did the Iron Condor position, we can enter notes. I want to highlight that. If you wanted to enter in some notes for your position, it's always helpful to do that. Why did I get into this position to begin with when I opened it? What were my expectations? What were my potential goals? Was there any thought of when I opened this position? I hope there was. I would always enter this about, okay, so we opened this covered call by buying the stock at 75, selling the March 75 call for 90. Well, what were my expectations? Well, my expectations were maybe to get assigned, but if I saw strength in the stock, maybe I'd look to roll the call if the stock had moved up to $77 or $76 per share. So in the Events Notes column, just click the little book icon there. And this will take you to a page that shows you the profit and loss chart for Johnson & Johnson currently. I could enter a new note now, or I could go back and add a note from the initial entry time of buying 300 shares of stock and selling 3 contracts. And of course, if you entered an erroneous event, you can delete that as well. All right, so let's go back to the portfolio. Now, Here's our position. Here's our covered call position. What do we want to do now? Well, we got to decide. Do we want to let it get assigned, take our 1.2% in the next 3 days, or do we want to adjust it? Well, as we hit expiration, or before expiration, what we'll want to do is we're tracking our positions in our portfolio. So we use the More Information button on the left-hand side, just as we used to enter the Iron Condor position from the search tool into the portfolio. And here's where we can make changes. We can do quick research, but in the Position Actions menu, this is where we see positions where we can add an option leg. Why would I do that? Maybe I created a collar on the position. I added a deep out of the money put for March expiration. We would do that. You do have to enter your dividends manually. So if I did receive 40 cents of dividend on Johnson & Johnson, we want to put that in manually. We can delete a leg, delete the position. If you put in a position manually, as we did with Johnson & Johnson, let's say accidentally, instead of putting in a commission of $5.95, I put in a commission of $595, and I'm actually seeing a loss on this position. It doesn't look right. Well, if you need to make any adjustment, you can just go into Edit Position, and that will allow you to make that adjustment as well. Okay, now that's from the stock leg. Most of our action may be done from the option leg. So as we get close to expiration, if we have a covered call that we decide to let get assigned, or maybe we know what we're going to roll it to already, when we click the More Information button next to the short call leg and go to Position Actions, we now have choices to exercise or assign the leg. So if you're tracking a long call, you can put in the exercise. If this call happened to be out of the money and we just let it expire, we choose Expire leg. If I already know what I'm rolling to, let's say I'm planning on buying back this March 75 call, maybe selling an April 77.5 call to get a little bit more profit, well, I could just go to Roll Leg, and that would allow me to input that roll manually. Again, add an option leg, delete leg, and so forth. But on both choices, for the stock and for the option, we have a choice, a selection for position analysis. And this is a very powerful tool. So as you're tracking your positions, whether they're covered calls, naked puts, bull puts, bear calls, long calls even, married puts, and so forth, we want to link to the position analysis screen. Now let's take a look at our analysis screen on the covered call position. So we have our original entry for the stock and for the call. We have our profit and loss chart here over on the right-hand side. We have our current stock price at $78.49, the natural break-even from when we open the position. My current option ask, well, we sold it for 90, it's currently at 355. Yeah, it's in the money and 3 days left to expiration, so our delta is pretty much at 1. And we have little to no time value. There's only a 0.1% time value left in the option price. General rule of thumb is usually we'd be selling a covered call or looking for a covered call that maybe had a 2, 2.5, or 3% time value. That's the profit we make on these positions. So a general rule of thumb is if the time value drops down to be less than 1% or less than 0.5%, we've made most of the time value we expected to make. We may want to look to roll the call at that time, and that's one of the alerts that we could set as well. And of course, we have 3 days left to expiration. Now, as I scroll down below where my current position stands right now, we see a little bit more detail of what we just saw in the profit and loss portfolio. We knew what our original position cost was, all right? That outlay of capital of $22,241. Our effective cost per share, well, that's our break even, and our original return, max return, is 1.2%, 1.1%. Now, of course, here's our current liquidation value, showing us more information than what we saw on the profit and loss chart. But we want to take a look at our current liquidation value. It's 1% after 27 days. Again, maybe not that great, but we just use this as an example. And then we can compare that to our future expiration value just below that. So our future expiration value is 1.1%. Now, this line here, the current liquidation profit to expiration profit shown on the covered call, yeah, we've made 90.5 of what we expected to make at expiration if we're assigned, remember, including the commission fee. Okay, so we may just want to take it off the table now. I mean, we've made almost 91% of what we expected to make on this position. We may consider just taking it off the table, taking our capital, and looking for a brand new position. What if we don't want to get out of Johnson & Johnson? We're still expecting more growth. Yes, we let it get a little bit too deep in the money than we would have preferred. Probably would have looked to roll this maybe when the stock was at $75.50, $76 instead of letting it go up to $78. However, there's still opportunities for adjustments. And as I scroll down below the liquidation value versus future expiration value. There's not a lot, of course. But we see some opportunities here. We're showing that we could buy to close our March 75 call for 355. And if we rolled it out and up one strike, we could potentially roll to the May 77.5 call, which has 66 days to expiration. Or we'd collect $1.93 in premium for that new option. It's still slightly in the money, but it's further out in time. And we have a adjusted net credit of minus 72 cents. So what that's taking into account is the original 90 cents we took when we first opened it, the new $1.93 premium we'd take in if we sold the May 77.5 call, minus the buyback cost of $3.55. So because our new adjusted net credit is now a debit, our downside protection is negative. Right? It's a negative 1% because it's actually done for, this roll is done for a debit. But it would take our new potential percent if assigned up to 2.4%. And we have a 61.2% probability. So we're doing the math for you. We're doing that heavy lifting for you. What would happen if I did roll to the May 77.5 call? Well, now you know it would be done for a debit of 72 cents total on your position. You would have a new potential return if assigned at May expiration, 66 days away of 2.4%, and you've got a 61% probability of getting that position, or getting assigned and earning that 2.4%. All right, well now that's maybe okay. I mean, that's good to see numerically. But what we really want to do is if I decided that maybe I'm a little bit more interested in this potential rollout, I kind of like the numbers. Yes, I know it's 66 days out in time. But what we want to do now is use this more information button on the rollout opportunity, and I want to go to Simulate Trade. And what the Simulate Trade feature does is allow us to view our original position versus our future position versus our new position. So over here on the left in red is our current position. We kind of know these numbers now. We have a current return of 1.1% and expect to make maybe 1.2% the max return if the stock stays above $75 at March expiration. And our profit and loss chart for our current position is shown here. Now if we make the and the max profit monetarily, of course, is $258. If we roll for a debit and buy to close our 75 call for $3.55 and sell to open that new call for $77.50, the May $77.50 call at $193, well, our new potential max profit would be 2.3% or so, and the monetary profit would be $528. Okay, and then there's our new profit and loss chart here at the bottom. So this is allowing us to compare the before and after picture graphically rather than monetarily. We know where we stand right now with our current liquidation and our future expiration in 3 days. What would this look like if we rolled 66 days out in time? We have a new profit and loss chart and our new monetary gain. Now if I decided I wanted to perform this rollout opportunity, this particular adjustment, as I'm looking out on the Simulate Trade feature, we can just add it down here at the bottom. So I can adjust my commission fee. Maybe you get a slight break if you do a roll. It might cost you maybe only, let's say, $6.50. So maybe I just change my commission fee and I put $6 here and just put 50 cents here. So for a total of $6.50, or I could just put $6.50 on the first line. But if I wanted to go ahead and make this particular adjustment at this point, we would just click Submit Change to Portfolio, and then it would link us back to the profit and loss portfolio and simulate buying to close that March 75 call and selling to open the January. It would take into account all the monetary values in our commissions. But when we look back at the profit and loss portfolio, it would show us a covered call position with shares of Johnson & Johnson, but with the May 77.5 call now instead of the March 75. All right, but let's say I'm not too keen on this, or I'm interested about something here. Let me go back. So we looked at our rollout opportunities. We've got a March call, but all I'm seeing is May adjustment opportunities. Now for these rollout opportunities, you know, whether you're trading again as credit spread or a long call even, or one of the married put positions or radioactive trade, we have some filters in the background. We're not showing every possible opportunity. It'd take you long to go through. So we have some basic filters in the background. The first thing you might be asking yourself is, where's the Aprils? We've got a March now, but what about April? Well, you don't see any in the rollout opportunities, and that's okay. Let's go ahead and close this. We had talked about this before, how we wanted to show how you could use the position analysis to help you simulate a trade. but also, can you do a manual adjustment and evaluate that as well? Of course you can. So we're tracking this position in the portfolio. This is an actual position, let's say. The stock is now way above our short call strike price, or fairly above our short call strike price. We want to stay in the position. We're considering some roll opportunities. We only saw May series available for rollout opportunities in the position analysis screen. What about rolling to the April 77.5 or the April 80? Okay, so to do that manually, to do a roll manually, if you have an idea of what you want to see, at any time from that more information menu, as you're tracking the position in the portfolio, we can select to go to profit and loss chart. Now this is going to pull up a position based on our cost basis. Again, 300 shares of Johnson & Johnson at 75, and we sold the March 75 call for 90 cents. We have 4 extra blocks that we can use to simulate adjustments. Down below, of course, is our profit and loss chart, our max profit of 258 that we saw, 1.2%. And then down at the bottom here, we can run some simulations. But we're so close to expiration, it doesn't matter. At this point, we know where we are. We're pretty much close to our max expected gain. But I'm not considering maybe doing the May series. I want to see what's available for April. So what would it look like if I bought to close my March 75 call at 355? We know that because we saw it on the other view. And sold the April 77.5 call. We can do this on the fly. So once I link to the profit and loss chart from a position in my portfolio, I'll click the View Options link. Now I have a March 75 call, so my first step is I have to simulate buying it. Okay, so what I'll do now is I'll click on the month to expiration here, March. I'll use the blue arrows on the far left here of the March series. It gives me the call and put chain for Johnson & Johnson. I see I have the 75 call added. Well, that's okay. I can click it again just one time, so I'll just click right on 75 call, and that just filled it into our third block. So I'm going to put in buy 3. Now we're shown the natural bid and the natural ask for the 75 call. The simulation, when we were looking at the profit and loss portfolio, it was just grabbing the natural ask price as the worst case scenario. But let's use some midpoints here. We'll say that with a natural bid of 345 and an ask of 355, maybe we can get filled at 350 by buying to close our 75 call. Okay, so let's just put in 350. Now I don't have to select buy to close or buy to open here in the portfolio. It's going to take care of the math for me. It just knows that what would happen, what would this look like if you were long 300 shares of Johnson & Johnson at 75, you sold a March 75 call at 90, and you bought a March 75 call at 350. We couldn't do that in our account because you can't be short and long the same option in a trading account. But the system just treats it as regular math. It doesn't need to know that it's buying to close or selling to open, because if we just put in those 3 legs, the system would, we're just going to look at a profit and loss chart of, hey, it's just a long stock position now, which it technically is, but we've increased our cost basis due to the buyback cost of that long call. So now we essentially, if we just closed it, we'd have an effective cost per share of about $23,280. I'm sorry, effective outlay of capital of $23,280 on this position, including the premium we received and the buyback cost for that option. Okay, but now what do we have to do? We have to simulate selling in April. Let's just say 77.5 call. Still in the money, but we're not going out to 80. So let's go to April, and we see the 77.5 calls, 162, 163. Well, we'll just leave the natural bid. We're not going to get a midpoint on that one. So let's click 77.5. Shows us that it's been added. And then here on our fourth leg, I've got my April 77.5 call. So we'll sell, and we'll do 3 contracts. Let's go ahead and click Submit. Okay, so this might not be too bad of a position. In fact, even though it didn't appear in the profit and loss, the position analysis view, I might be more tempted to go with this trade. Remember, our current liquidation value for Johnson & Johnson was around 1.1%, and that's within 30 days. So if this was an actual trade, we would have opened it and said, hey, my goals are to find a blue chip stock and make a 1% return over a 30-day time period. So we're pretty much close to that. By rolling to the April call, which again, let me just go back up and get the days correct for you. By rolling to the April call, it's 38 days away, so we're kind of keeping within that realm of a 30-day time frame. All right, so right now we've got a 1.1% return. Let's remember that, our current liquidation value. Okay, if we roll to the April 77.5 call, which is 38 days out, will increase our maximum profit to 471, or roughly about 2.1%. Now what this profit and loss chart is not taking into account, we have to remember this, is commission fees. This might actually be closer to 1.9 or 1.8. But if I was comfortable with that increase in potential profit, I'm still in the money, remember, we sold the 77.5 call, so we're still slightly in the money, and we've increased our return by about 1%. Well, if that matches my goals, this might be the adjustment I want to look at. Remember, going out to going out to May, which was 66 days away, on the simulation we saw that that was only a 2.4% gain. So we only moved up 1.3%, but that's for 66 days. So essentially a 2-month period, really we're only increasing at 0.65% every 30 days. So if that doesn't match my goals, that might have been why I didn't decide to use the May 77.5 call, because if my goals when opening this position, or for all my covered calls, is I want to make at least 1 to 1.5% per month if assigned. I'm not saying this should be your goal, but just in general, if that's your goal, well, if you see a rollout opportunity on the position analysis, in the case of a covered call, don't roll for the sake of rolling. You may just want to let yourself get assigned and take the 1% and then go into a new position. Rolling to the May, that only increased my goals, increased my return by about 0.65% every 30 days. That didn't match my goals. I'm not going to roll to that one, but this one might do the trick. Okay, so now that I've seen this rollout opportunity and I decide I like this better than the May, I'm not even going to look at the 80. Let's just leave that alone for today's example. Now, I could choose, should I add it to Portfolio now? Well, no. When you're creating a simulation, when you're mainly doing a simulation of the profit and loss chart, there's a link here to add to Portfolio, but you only want to do that for a new position. If I clicked add to Portfolio now, this wouldn't simulate rolling to my April 77.5 call at 162. This would put in a whole new position for me in the portfolio as a custom spread, and that's not what I want to do. But I know my price now is 162. Buyback cost is about 350, so I can take that information and just simply roll myself manually. Or if you'd already done it in your brokerage account, hey, that's fine too. All right, so we'll go back to our Johnson & Johnson position. Click the More Information button next to the call, because the call is the leg I'm performing the action on. Remember, we go to Position Actions, and now I'm going to Roll Leg. So this will take me to a field. The system knows we're going to have to roll a leg. What does that mean? It means we're buying the close one. We're selling to open something else. So it filled in the information for us. Here is our existing call, the March 75. We have 3 contracts, today's date. The commission fee, this is what I entered initially for selling to open the short call. So again, let's take the simulation that's, if I go back into my brokerage account with Trade Monster, Thinkorswim, usually if I just open a new option, my commission is $5.95. But when I go into the roll at my brokerage account, they give me a discount, so I'm really only paying $6.50 to sell to close one in this case. I'm sorry, buy to close one in this case, and sell to open the other. So I could do that again just by putting in a commission of $6.50, or I could narrow it out between legs. I'll put in $6 here. Well, let's say this was an actual trade, and we did get filled at the mid price right after we were looking at it, so we'll keep our buyback cost at $3.50. All right. Now, which option are we selling to open again? It was that April 77.5. So again, I click the button for select option, go to April 77.5, and we saw it at 162, 163, but let's just assume that we get filled at 163. Of course, I'll put in my commission fee of 50 cents. So now my combined commission fees will equal the 650 I'd mentioned, but of course, as I said, you could just put it in 650 here, just put in 650 here, it doesn't matter, but you don't want to put it in twice because that won't reflect the correct monetary value. We'll leave the price at 163, and the system automatically records that our stock price at time of trade right now is 78.54. Okay, so that's our roll. Let's submit this. So now I'll click Submit, and we're back in our profit and loss portfolio. Now, a couple things we need to point out. First, we're only showing the April 77.5 call. Now, that is our existing covered call. Our open covered call consists of long stock and short and April 77.5 call. Okay, the other call is not shown. Why? Well, because it's recorded in the historical reports and the analysis. We'll take a look at it in just a minute because it's no longer an open trade. We've closed that leg, so it's no longer part of our open position. I mentioned earlier that effective cost per share. When we first opened this covered call, the effective cost per share just equaled the stock price. But now we've made an adjustment, so our effective cost per share for the stock has increased. We collected 90 cents up front. We had to pay $3.50 to buy it back, so there's our difference of $2.64. So our cost basis on this stock, the underlying stock, has moved from 75 to 77.64, and we see the gain now on our stock and the loss on our call. Now that's anytime you open a new position, a new option trade, whether you're selling a naked put, an iron condor, bull put credit, you'll always see a loss right off the bat. That's expected. And what I mean by that is we put in a price of 163, but the system again is showing the current price. It knows this is a covered call. It knows we sold the call. So this current price it's showing us is actually the natural ask price. The worst case scenario if we move to buy back the call right now would be 165. Okay, so as we track the position further, we know we have a new, we know we have a new percentage return, a new max return because we have a new adjustment. So as I'm tracking the position now, we can still always go to that position actions and position analysis view and see where we stand, and as always, compare our current liquidation value to our future expiration value to potential rollout opportunities. So we know where we stand right now. We see our max return as 441 at April expiration now. The max expected return came out to be 1.9%, of course, after the commissions were taken into account. And we can see our current liquidation value again to our future expiration value. Okay, now it does show some other rollout opportunities, but we wouldn't look at those now because we just opened the new position. What happens? Oh, I'm sorry. Let me go back to that. I apologize. Let's go back one step. Let's go back to our position analysis menu. Now, one thing that you'll also always be able to see on the position analysis menu for any strategies, we scroll down below, we can now see our history. Okay, so what's shown in red is an open position. We're still open 300 shares of J&J. We are open an April 77.5 call, and it's showing, well, here's our gain on the stock, and here's our loss in the existing call. We've been in it 0 days. We just opened it today. Now, our closed position, our March position, March 75 call is closed, but we had to close it of a loss of 791, so we're seeing a tabulation of our total gain loss here. That's available for you in the position analysis view. This is also available for you back on the portfolio. Let's go back to the main portfolio page in what we call regular analysis, or just the analysis tab. So I go into analysis. So if anyone's asking, well, yeah, you performed this role. Oops, sorry about that. You performed this role, but your March call disappeared. Well, it disappeared from the profit and loss portfolio because it only tracks open trades. But in the analysis view, the historical reports, and when we look at the position analysis menu, you'll be able to see a running tab of your closed positions, what you have open, and what is your total monetary gain loss for the investment on the position. Okay. Now, historical reports is a little bit different view, still very useful. Ernie kind of created this one originally when he created the portfolio tools to help with tax time because it gives you a running tab. Now, we're just looking at one position, but it gives a running tab of our realized and unrealized gain or losses. So we know we have a realized loss of 791 on that first call that we sold, but it's not showing us the unrealized loss here for the other two legs. We can always do that in the analysis as well. Now let me shift, let me go back. Let me shift menus very quickly. I'm just going to go to the Radioactive Trading webinar here for a second, that portfolio. Let's submit that. Well, this is the historical reports there, just rolling positions here. But the reason why I wanted to select this one is if I go to analysis now, we can see a rolling gain and loss of all our positions, all of the adjustments, dividends received, open positions and closed positions as well. But I also wanted to link to this because it's better to have multiple positions that we've been tracking since the beginning of 2013 in the snapshot view. Sorry about that. That did not. Sorry, let's go back to Radioactive Trading webinar. So the snapshot, this just shows you multiple positions and whether you're up or down on each one. I've gotten used to using the profit and loss portfolio, so that's the first thing I check in the morning when I log on the PowerOptions is what is my liquidation value versus future expiration value of my collars, my married puts, my bull put credit spreads on my indexes and things of that nature. But the snapshot view just shows you what's up, what's down, even what's unchanged. Got a couple things that are unchanged here today as well. But also for the allocation view, this just gives you, some different graphical information of the positions you have, what part of your portfolio is in different sectors or industries, or by investment amount as well. And I wanted, if we had used the new covered call portfolio, just Johnson & Johnson, be 100%, it would be closer to 50%, 55% cash, 45% in the Johnson & Johnson position. But here you can just kind of get a view with different sectors, different industries, so you can get a pie graph here and some different information of what you have invested in each one. Now, as we mentioned earlier, once you create a portfolio, whether you entered an iron condor position, covered call, or anything along those lines, you can put in the alerts, okay, the various alerts. So also, one thing I may check, especially when I get closer to expiration, so honestly Thursday morning when the market opens, the first thing I might take a look at is my portfolio, my portfolio, but the alert summary. And what this is just showing me is all of the alerts that have been triggered that I've set in my portfolio. So my bull put spreads, the bull put portfolio, we have an alert for UNP and WYNN. Sandus collar has been triggered for leg 1. You can see that there. The iron condors portfolio, different one, but the Russell. Okay, so we've made 95% on the ask price of the Russell position, and of course others as well. So now that an event looks like it might have taken place, or one of my alerts been triggered, I can click right on the description here, and that'll take us into the profit and loss portfolio. So we see the 2 alerts been triggered, long put on UNP. Well, this is a March position, a March bull put, for example, where we sold the 125 for $1.26 and bought the 120 for 62 cents, and this was back a long time ago, January 30th. The stock's at 139.34, so this is going to essentially expire worthless. And again, we've checked view position analysis, so we can scroll over. And for this particular bull put, I can see, okay, well, my original expected gain was about 640 or 14.7% of the margin requirement. We could liquidate right now for 610. Now, this 95.3% is showing us that right now, if we liquidated and made a profit of 610, that's 95.3% of the 640 we expected to make. And of course, we leave it alone to expiration, and the stock still stays at 139.34. We're not projecting that it's going to do that. It's just saying based on the current price, we do that, and there we are, $640 or 100% of what we expected to make. So again, most likely I'm just going to let this one expire worthless. Okay, so to do that, we'd go into position actions, and we would go into, expire the leg or expire the position, for example, or just we could just close the position for 0 value, which would simulate a liquidation. But if maybe you wanted to consider, now the stock's at 139, maybe you're considering rolling it or maybe looking at something else, you could try to look at the position analysis on the bull put credit spread. It may not show you anything because you're pretty much close to 100% gains. The system would probably assume you're just going to take that off the table and then move into a new position. Now, something I wanted to point out to you is that for the spread positions, credit spreads, debit spreads, condors, and so forth, we show you a little bit more information here. So we're showing you the midpoint pricing for the short legs. And as we scroll down to view the liquidation value versus future expiration value, we see that, we're showing you the close price, the current liquidation value here at market would be $30, so that's the 610 profit we sold. However, the midpoint, let's go back up, because it's so far out of the money now, the midpoint pricing is actually showing a 0 bid for a March 120 put and a 3-cent ask. So grab the midpoint of 0.015 cents, rounded it up to 2. So if I sold to close my March 120 put for 2 cents and bought to close my March 125 for 2 cents, well, that'd be 0. So using the midpoint pricing, if we could get filled at those prices, we'd actually have a 0 cost, not including commissions, of course, but a 0 cost to close this bull spread, and that'd be there. So anytime you're tracking one of these spread positions, you'll be able to see the liquidation value, liquidation profit and loss, and liquidation versus expiration of market, versus midpoint. Okay, so you'll be able to see that. Now, no rollout opportunities are shown, so that's okay. I mean, in this scenario, I actually would probably treat this as a whole new position. I'd probably either just let this expire or close it now. And if I still thought UNP was bullish, hey, maybe I'd look at the combination of selling to open a 130 and buying a 125. But again, we could try to do that manually using the profit and loss chart to roll a position. All right, so as you're tracking these positions, you'll be able to see, sorry folks, you'll be able to see the different views. Now, I have this spread out for ease of view in the webinar, of course. Let's go back to our Trade Monster webinar. But to be honest with you, my personal account, which isn't shown here, but my personal account, for example, and a lot of times what I see when on a coaching session when I'm looking at a customer's portfolio is they'll have multiple positions. And let me just fly through this real quick. Again, I'll do the manual selection of a covered call. Let's say we did this at the beginning of the month. Let's do WNR, bought 100 shares, 0 commission fee at 35, and on the same day we sold the March 35 call, a 1 contract, and probably got about 85 cents or so. Okay, so let's submit that. I'm just going to run through this very, very quickly. Okay, so there's, I have a covered call position, 2 covered call positions. Now let's add very quickly a bull put. What were we just looking at? It was UNP, I believe. So let's add a quick position that's going to be successful on UNP. Okay, this is a good example. So I clicked on bull put. Remember, the bull put won't have a stock leg with it. So the first option, my buy to open put, when I click select option, the system needs the input of the stock symbol. No problem. Let's type in UNP and click submit, and that'll take us to that option selection, the chain selection we were viewing before. So March, let's say we bought the 125 and we sold the 130. Again, let's say we just did this at the beginning of the month at 3-1. And let's just keep math simple, 1 contract. But let's say UNP was down a little bit more, so we were actually able to get, this cost us, let's say 15 cents, and then we got 50 cents for the March 130. Okay, paper trade, of course, 0 commission fees, no problem. Let's go ahead and click submit. And I just wanted to do this quickly. So now, if I enter more bull put credit spreads, they'll all be linked here. So I have my covered calls will all be listed under one header. My bull put credit spreads will all be listed. If I added a married put, it would create a new header, so all my married puts would be there, and so forth. Oh yeah, this is, Jose asked, do you have weeklies too? Yes, it just so happens that the positions I selected don't offer weekly options. Okay, so let's do a long call. Oh, let's just do a long call on Google, shall we? Let's simulate a long call on Google. So let's say that we bought an option today. Again, it's not a stock position, so we don't have a stock leg. So when I click select option, I have to type in my stock symbol. This is not a recommendation or suggestion, of course. I'll hit Google and hit select. And now we're going to see a wider chain. So this one happens to not only have weeklies, has what are called the continuous weekly series. So I have the expiration coming up next week. The continuous weekly series that's next Friday has already been released. There's 25, 26 securities that offer these continuous weekly options. So they'll always have 5 cycles in a row. And this Thursday, I believe, the next cycle will come out. Thursday morning, tomorrow morning, the next cycle for April 12th will come out on these weekly series. So you have the 9-day, 15-day, 23-day, 30-day, and then 38 days available. So you can use those. And of course, if I'm looking for a new position in any given strategy, a new covered call, a new long call, I can force the system to only look for positions that are 9 days out, 15 days out, 23 days out, whatever weekly cycle I wish to use. And Jose, no, we don't offer the mini options. So we do offer the weeklies, of course, but not the minis. All right, so Google, let's go back to where we were. Google, I'm going to trade a weekly call, which I wouldn't trade a long. I don't suggest trading long calls using the weeklies because it's too short of a time frame. I prefer, if I'm buying a call, speculating an increase in price, I prefer to go further out to allow more time for the stock to move in my direction. But let's go to March, 9 days away. What have we got here? Let's say we were going to buy the 820 call right now. I don't know. Let's go 810. All right, so we'll just buy 1 contract, and I'll put in a commission fee of 0 because this is a paper trade, and the current price is 18. So it's going to cost me $1,800 to buy 1 call at the March 810 weekly. We'll just click submit. What are we going to expect to see in the profit and loss portfolio? A new category for long calls, but all the process is the same. I can enter alerts now for my long call or for the new covered call position we entered, this one would probably be rolling, the WNR, or the UNP spread, of course, that we looked at. Hey, an alert's already been triggered because we've made 80% here of what we expected to make on that short put, so that's why that alert is already triggered for us. We may consider just closing it right now. But as we can see, we have by category now, so we'll, I open for a coaching session, I go into a customer's account. I may see as much as 7 covered calls, 3 bull put credit spreads, 8 long calls, 2 strangles, 2 straddles, and a partridge in a pear tree. So, all right. Well, ladies and gentlemen, I think that's about everything I wanted to cover. I'm going to navigate back over now to our slide presentation. If you have any last-minute questions, go ahead and send those in. I just want to let everyone know that what is the subscription. We didn't get a chance today to talk about the search tools because we're just focusing on the portfolio tools as we head to expiration. But the subscription service, PowerOptions, the 20-minute delayed, it gives you access to all the tools for all 23 different strategies, the search by symbol, full view of the option chain, the portfolio tools. That's $60 per month. Now we do offer a real-time service, so every time you submit a search, refresh the page, refresh the portfolio, refresh that simulate trade feature we were looking at, you'll get the numbers at that exact instant. Okay? And then, of course, we do offer a set of backtesting tools, historical tools, a historical option chain, historical search by symbol in the given strategies. But that's only included in the upper level of service, the real-time plus historical, which is $100 per month. Of course, there's discounts available for annual subscriptions as well for each level of service. Now, our remaining schedule for this week, Thursday at 12 noon Eastern Time, Kurt Frankenberg from Radioactive Trading. I'll be joining him to host the Intro to Radioactive Trading presentation. Every Friday at 4:30 p.m. Eastern Time, just after the market closes, we host an open discussion Q&A session. I don't have any planned material. That webinar is just designed for anyone who wants to come join us and ask any questions they have about options, strategies, power options tools, strategy comparisons, anything like that. And then typically every Wednesday at 12 noon and also Tuesday at 12 noon, Kurt Frankenberg does a different Introduction to Radioactive Trading presentation. And every Wednesday at 12 noon, we are typically doing the Intro to Power Options presentation. Since we're a few days before expiration, we did a standard expiration, I should say. So as A pointed out, there's technically always an expiration coming up with the weekly series up to about 160, I think it's 175 now, securities that offer the standard weekly options and 26 or 27 securities that now offer those continuous weekly series. But when we get close to a standard expiration, we like to showcase the portfolio tools to show how they can help you track and manage your positions so you're not doing all the math yourself. But next week, probably Wednesday at 12 noon, we'll focus on the search functionality in a few different strategies because we're probably going to be looking for new positions after the current March expiration. All right, well, I don't see any last-minute questions coming in. I want to thank you all for joining me this afternoon. I hope you all got some useful information. If you think of anything later on, please feel free to contact us at any time. You can send us an email to support@poweropt.com. If you live inside the continental U.S., you can reach us toll-free during market hours at 877-992-7971. And if you live outside the continental U.S., you can reach us at 302-992-7971. Of course, there's contact links on the bottom of every Power Options page. Well, thank you again, ladies and gentlemen. I look forward to seeing you in one of our new upcoming live presentations. I hope everyone has a great trading week and a good expiration coming up this Friday. Take care, everyone. We'll see you soon. Good night.